How are we looking today?
Look, we're going to kick off with a loss, down by 1/3%. So adding to yesterday's 0.4% decline that we saw for the local share market. And that was in the aftermath of some much stronger than expected US inflation figures. Pete, you might recall us talking about that yesterday. So there was a very pensive atmosphere overnight ahead of the producer inflation numbers, which were released. And these figures were below the market's expectations, which is why we saw a recovery for US markets in particular. Bearing in mind, yesterday they were down by about 1%, where the leading indices were concerned. This session, the Dow was flat, the S&P 500 up 1.7%, and technology stocks were the outperformers, with the Nasdaq up by 1.7%. Still a lot of disquiet, Pete, notwithstanding the better producer inflation figures about the outlook for interest rates. A June rate cut is now cancelled. It's a question of the extent to which future rate cuts. There's 2 more expected between now and the end of the year in the US. The timing and the likelihood, that's all up in the air now. There seems to be a revised mindset towards that, given the strength of the inflation figures at the consumer level. So that's why you have got interest rates at elevated levels. They moved a little bit higher last night. A 10-year government bond at 4.56%. So above that 4.5 level, that's troublesome for stocks. Still the highest level this year. Elsewhere, European markets weaker. The European Central Bank left rates on hold, said that they will be data dependent with their outlook, but the markets are expecting a rate cut in June still, where the European sphere is concerned. The Aussie dollar was under pressure overnight, but it's rebounded. It's trading at 65.4 US cents.
Alrighty, Tom, thank you. We'll talk to you later.